We got great news today. Great news for interest rates, which is great news. So it's not normal, but we were expecting it. We called it. Does that make us smart? Maybe. Maybe it makes us lucky, but we actually called it, guys. So here's what's happening. Check it out. We've been showing you rates in 7.99 or 6.99, stuff like that. We're down in the 6.8 all of a sudden, according to Mortgage News Daily, 6.85. And why is that, guys? Check it out. This is good. Green is good. Look at the lower rates coming in. And a lot of that's because of a weaker jobs market. The Fed governor, good old Jay Powell said that he thinks the economy is not as strong as it should be. So that's good. And he's kind of hinting that, a rate cut may be on the table. And then this is the 10-year treasury. We don't normally show this graph, but I'm showing it today because look on the far right, that little red, that's good, right? In this case, it's like opposite of the one before. Red does mean lower rates on this graph. But look down below. If we can stay below where we are, these black horizontal lines, and they may be hard to see if you're watching this on your phone, but man, if we make some progress here, if we hold and make some progress, we got room to run where rates can finally come down. So we'll see how long that takes and if it actually happens. I did predict at the beginning of this year that I think rates were going to finish the year around the mid sixes. Who knows? Maybe we get there a little sooner, maybe we go lower, but for right now, I mean, we're still stuck in that high 6-7% range. But today was a very good step. And why is today? The CPI. That's one of the two big inflation measurements that the Fed loves. And CPI came down. And we called this because there's only two things keeping inflation high right now. Literally, the two things are housing and motor vehicle insurance, meaning the auto insurance you pay on your car. There's not a whole lot the Fed can do to make cars like insurance less because the insurance keeps going up and up and up and up because cars have more and more cameras and they're more and more expensive. So there's not a whole lot they can do for that. But if you were to strip out those two components, housing and the motor vehicle insurance, inflation's like 0.01. Like it doesn't exist right now. So literally they've done what they need to do in shelter. The reason why we knew this coming down is because the measurements used for shelter inside of these things, they're like, it's a 3 to 6 month lag. So in other words, the data is not real time for this stuff. So that's why we know it's coming down. It's going to keep coming down for a little bit, and that's good. It's 0.19. Sorry, I was off on that earlier. But if you strip out the core and everything else, it's 0.19 is the current inflation. They want it just under 2. So the good news is we finally have a 2.98. We're at least in the twos. So they wanted around 2%. They at least have a 2.98. They're getting closer. They being the Fed. So without weaker unemployment, they're now in a 2 point something. If it holds here, which we think it will, that's going to be a good thing. And so now, what's the next screen? I'll show you why. So you guys can see this shelter and how it's been trending down, and it should continue that way for a little longer. So that's why we think inflation's coming down. And the other part, apparently, in investors, I don't know who these investors are, but they're now pricing in an 89% chance of at least one rate cut by September. Like that's what, 60 days away? 89% chance, that is huge. I don't know. Maybe I'll be in that 11% that doesn't think so. We'll see. Time will tell, but man, that's cool. Job reports, as I mentioned, they're just, weaker. And the reason why is they keep revising these old numbers. And we've talked about that too on this before. And the old numbers that came out said, oh, things are great. They're not great. We just don't see that data for 3-4 months, from the past. And now it's 4 months ago and we don't care. So at the end of the day, we're trending in the right direction. So that is good news for all of us in the housing market. I thought this graph was really interesting. This is the active housing inventory compared to pre-pandemic levels, meaning what's available to be sold. And they're comparing June of 2019 to June right now. Texas has 5% more inventory. Florida has 0. Those are about, Idaho is +4. But most of the headlines I've been seeing is like this, you would think the sky's falling the way the headlines say like, oh, things are terrible out there. And I recognize there's pockets. There certainly are. But the reality is, man, we're only 5% more inventory from pre-pandemic levels. That's okay because we have a ton of people coming into Texas. I think Florida might have a bigger problem, but they're at 0%. Look at the rest of the country, guys. A lot of negatives and a lot of double-digit and a lot of big double-digit negatives as far as inventory, what's available, meaning there's just still a shortage of housing. Like this is shocking how much fewer homes are for sale now compared to pre-COVID. I mean, the biggest one I see is look at Vermont, -67. Holy smokes. So the next slide, New York minus 46. The next slide talks about New York City's apartment shortage. I realize that's not a house, but it's still housing. And rents are up 33%. There's only 36 permits for multifamily that have been allowed there apparently last month. So the problem's not getting fixed anytime soon, and vacancy is almost zero, 1.4%. So again, there is a housing shortage, which is why prices continue to go up in most places. There's a wave of apartments coming. That's good. I mean, I don't love it. We want people to be buying houses if they want to buy houses, but at the end of the day, we do need housing, as we just saw. There are areas, so don't get me wrong, there are headlines and there are true examples of where overbuildings happen in some areas, but the reality is, I say, as a whole, it's good, but there's no question there is pain out there. This is just me being a responsible mortgage person. We haven't seen a lot of renovation deals as of late, renovation loans, but if there are, maybe they're expecting it. I think you could see that in the future. FHA has increased what they'll allow for the repair cost to be. So that's me being a responsible mortgage person, telling you I know what's going on, but not trying to bore you with mortgages. The fun stuff, baby. So I didn't know this. Forney. So if you're not familiar with Dallas Fort Worth area, you can see it's over there in the east of Dallas. Forney. We've had friends that have lived there. We do loans there, of course, but I knew it to be this little rural town. Apparently, it's grown 51% in the last 3 years. 51%. That's incredible. And then also, side note, apparently in 1987, it was declared the antique capital of Texas. So that's my little PSA for the day. So the more you know, guys. So many birds. I didn't know this. Apparently, I mean, I knew one part. I knew Texas is a big migratory pattern, like birds flying south and all that stuff and north. But apparently, because birds, they navigate at night a lot of times by the light, Houston has enacted a lights out policy. So I've heard this for sea turtles in Florida on 30A in the Destin area, but apparently big cities are trying to turn out lights to help birds go where they need to go. So who knew? And then lastly, the meme of the week: be the surprise onion ring in somebody's French fries. I do love that one. It's rare, but it happens, and I love it. So, guys, as always, if somebody that can use this, please forward it. You want to share, subscribe. Hopefully, you're already friends with us by now. And I hope you have a wonderful, wonderful rest of the week, and stay cool. It's getting hot. It's only like mid to high 90s, and it feels just so freaking hot. So stay cool. Have a great week. Call us if you need us.